Okay, now here we talk about how to calculate the GDP. As we all know, we have some various methods of calculating GDP. Just like what I mentioned previously in this episode, I said we can use expenditure method or income method to measure GDP. But we also have a formula, which is do not if we just count the consumption or the income, we count expenditure and the income, and here is a more detailed formula. So GDP equals to consumption plus investment plus government spending, or you can say government purchases, and at net exports. So consumption is expenditure, investment is expenditure, government spending is expenditure, and net exports is also expenditure. So now we need to figure out, we all know this formula well, but why it is calculated like this. So the reason why I chose this picture is because it is kind of like accounting. Because accounting has income statement and statement of financial position, really seems to be similar with this graph. So first we have a total balance, which is actually in accounting it is reversed. The total balance and GDP per person probably will show in the very bottom of the of the chart. So first we have consumption, investment, and so first consumption, non-durable goods, which is in accounting languages, current assets. So non-durable goods include the definition of it is the goods that cannot be used for over 1 year. For example, some stationery is non-durable goods. Some I would say pencils, non-durable goods, being included in stationery. Some correction tape, tissues, all kind of things like papers. They are all being counted as non-durable goods. So GDP should also include some depreciations of some non-current assets, but we'll talk about it later. So durable goods, of course, it means that those goods can be used for more than 1 year. For example, the projector. For example, some books. For example, and also some shelves. So we have the balance of non-durable goods and durable goods. Then we have services. So services is what we told, we need to estimate the value of services, because services if you do the service of taking care of old people, if you are his son or his daughter, these kind of things, of course, do not charge free, but we need to estimate it. So the second is investment. There are non-residential fixed investment, residential fixed investment, and inventory investment. So we can see that in total of this graph, almost all things has a positive balance, but inventory investment do not have a positive balance. We can see it is a -12 balance. Because if we see inventory as a current asset, which is we need to see this, but this is expenditure. So for expenditure, it is kind of inventory investment can be seen as a kind of income, so we need to reduce the amount. So for government spending, which we can also call it the government purchases, we have federal, defense, non-defense, state, and local. Non-defense, you can be some high technology, or state and local, for example, street lighting. So for net exports, because if we export goods, others need to pay us money. However, if we import goods, we need to pay others money. So if we need to calculate the total expenditure, because we consider it as our nation, so the exports is kind of being our nation, and imports is kind of income because we import them into our nation. So it is actually exports minus imports. So if this country have a net exports of a negative balance, it is do not have a balance of payment. And this is how we calculate GDP. And the reason why we calculate this in the format. So we simply, because expenditure, non-expenditure items, we just reverse the order and make it a negative balance. And if it is an expenditure, we just simply add them, which is we can see it just puts all the expenditure in debit side, and for inventory, investment, and net export, we put them into the credit side and then get a balance. And the balance is the gross domestic product. Thank you all for listening. Have a nice day.